Hey everybody, it's Brian Shannon from AlphaTrends.net. Today is Friday, the 12th of August, and another good week in the market. Russell 2000 in particular up 7%, biotech's up close to 7%, just pretty much across the board, except of course oil and bonds. We were positive. So let's take a look at these charts, and make some sense of it. You can see the S&P 500 up through the year-to-date volume-weighted average price. That's, of course, from that point right here. What we're going to do now is actually take that point and draw a trend line across, and you can see that comes in right along with the 200-day moving average. That's our next level of interest on the upside. It doesn't mean we're looking to sell short and look for the market to magically stop at that level. It's a level of interest where we have the potential for supply to be found. When we take a look at the shorter term time frame here, this is a 15-minute time frame. You can see I've got a couple of volume weighted average price levels on there. Some of them might be a distraction to some of you who are, don't trade shorter term. So I'll just get rid of those and leave. This is the week to date volume weighted average price. That's the month to date volume weighted average price, and that's the volume weighted average price from the Federal Reserve meeting. The volume weighted average price from the Federal Reserve meeting has been important for this rally. You can see that on Tuesday we pulled back to it, and from there it was up and away. One thing that I always talk about that has saved me more money than anything ever in the market is the direction of the 5-day moving average. When the 5-day moving average is rising, as it was right here, I'm not looking to sell short. I definitely got cautious there, and I was thinking maybe we would break down like this, and if so, I was ready to get short. But because the market gapped higher and I didn't short over here because the 5-day moving average was rising, it saved me a lot of frustration and losses. So even yesterday, the market faded a little bit from that volume weighted average price from the beginning of the year, but the 5-day moving average was advancing, so I'm not willing to get short this market. And again, that has saved me more money than anything in the history of my 31 years of professionally trading the market. So when we take a look at this, we have the next level of interest that has the potential to become resistance right up there. If we throw a Fibonacci on that and say from the high to the low this year, a 61.8% retracement is just up there. So what's the point of looking at these levels of interest if we're not going to take action at them, you might say? To me, it's always, as I say, a level of interest. What I want to see is evidence that the sellers do gain control and then start to break down. It gives me more confidence in that next move, and I won't fight that level just because it's at a perceived level of resistance if we still have intermediate term momentum rising. So that's the value of those lessons. Now, of those levels rather. The question here that everyone is asking is this a new bull market, or is this a bounce within a bear market? The answer is nobody knows. We'll know well after the fact. I certainly wasn't expecting a rally of this magnitude that we've seen off these lows. But again, the point is, if you don't fight the intermediate term momentum, it doesn't really matter. I'm not interested in making the academic debates. To me, it's always about making money in the market, and that's the focus of Alpha Trends every single day. When I do this video for subscribers, the end of day video every single day for subscribers, usually not as in depth as the Friday one, but and then the stock trade idea. So the question is, to me, I don't really care. Truthfully, I don't care if it's a bull, if it's a rally in a downtrend. I'm not trying to pick and tops and bottoms and to sound like an intellect. I'm a trader trying to make money. We can look at all these levels of interest, the year-to-date volume-weighted average price in the Nasdaq, and then look to the shorter-term time frame. Even on Tuesday, when we were lower, we came down to the volume-weighted average price from the Federal Reserve. If you know, I've had that on there since the moment that the Federal Reserve, made their announcement on the 27th. I haven't taken it off because it tends to become important. Same with the month today in the week today. Anyways, the 5-day moving average is rising in the Russell in the Nasdaq. I'm not going to fight that momentum. I'm not going to fight the momentum in the Russell 2000. Look at the slope of this 5-day moving average. It's been higher this entire time while we've been just slicing through one level of potential resistance after another. We sliced through the volume weighted average price from COVID, the year to date volume weighted average price. We got through the volume weighted average price from the all time high today. We got through the 200-day moving average today. These are things that, this area might end up being where we make a near term top and, perhaps pull back, but there is zero evidence that it is. We closed, right on the high here. To make a bet because you think it's going to become resistance makes absolutely no sense. What do we want to see happen for a top to occur? Maybe something like this, a little distribution the next couple days, and then we start to see the 5-day moving average flatten out. The market might get trapped under it, do something like this, and then as it makes a lower low below the declining 5-day moving average, then I want to short it with a stop over here. Until it does something like that, I'm going to continue to look at this market and say, my bias is bullish. It scares the hell out of me to buy up here because we're quite extended. And if I'm going to be buying, at these levels, I'm going to do so with, shorter term volume weighted average price levels and look to it and say, I need to really manage risk closely. The semiconductors are heading, it looks, right to their year to date volume weighted average price in this prior little area where they might end up being, this might be the group that breaks out, runs into resistance, and then it starts to decline, or it's going to do what the other markets are doing, is maybe consolidate there a little bit and then run to the 200-day moving average. If we take a trend line off of these peaks, you can see we've broken, those levels. So you could draw another trend line that looks like this, and maybe it's going to run up to there. The point is, the most important thing you can look at from an intermediate term perspective is the 5-day moving average in its direction. I did not get bullish on these semiconductors until today because even though we had this big rally, to me, I'd rather miss a rally and, go with this, what's statistically more likely to occur, which would be something like that. I'd rather, as the phrase goes, I'd rather be on the sidelines in cash, wishing that I was in, than be in the market with the wrong position, wishing that I was out. So semiconductors, the buyers are back in control there. The biotechs, they ran right up to the top end of this range. They didn't make a higher high, but we encountered a little bit of supply. Is this now the top? I don't think, there's no evidence there. Again, we ran out of steam yesterday and, we're a little bit higher here today, but we still have a 5-day moving average. If this market is going to, show that it's running into supply, maybe it does something like this. And then, at this point, that's where I would become bearish on the intermediate term, and I would have my stop above a high that looks like this, or perhaps this high. Do what's right for you for your time frame. Don't listen to other people. Use the knowledge of what the market's telling us to come up with your plan. And implement it with discipline. That's the approach of professionals. Not to say I've got to make every trade and take every move. I've spoken about, we spoke about 2 weeks ago that at this point, the financials looked like the S&P 500 did on this day. Go back 2 weeks ago and take a look at that video where I had pointed that out. I didn't trade the financials. I missed this entire move, and I'm totally okay with that. I don't like to trade financial stocks. I've generally lost money with them. I consider them to be commodity-related stocks, the commodity being the cost of money, and money is, to me, a commodity. And I've missed this entire move. I have no problem with that. You've got to do what's right for you. It's not about what other people are doing, but look at it and say, does it make sense to you personally? Energy names are right back up to this level. You can start to see that, maybe this is a shoulder, this is a head, and this is a shoulder. Now it's kind of messy in here, and I'm not really big on patterns. To me, I'm more interested in, okay, we have the potential that that's a pattern. But would I want to buy a breakout, let's say on Monday? I wouldn't want to, because it just rallied from 70, let's just call it 71 to 78. It just rallied 10%. Instead, what I think is more likely is it would, break out, kind of pull back in, perhaps down to the volume weighted average price from this low, and that volume weighted average price would come up like this. The 5-day moving average would come up like this, and then maybe, middle of next week it starts to do this. We'd put a volume weighted average price off of this peak. That VWAP would look like this. And then if I was interested in getting involved, I would want to buy there. I wouldn't want to buy on the pullback, because maybe it just keeps pulling back. Instead, I want to let it kind of settle down a little bit for a day or two in here, buy it above this level, and then set my stop underneath one of these higher lows if that's the way it sets up. So again, I do this analysis every single day for subscribers to Alpha Trends. I'm going to have a sale coming up soon. Keep an eye out for that. If you're not following me on Twitter, I'm putting a ton of information out there. And give this a like, share it with your friends. Thanks for tuning in. Have a good weekend.